Hello and welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, the Nifty really saw a non-directional move and a range-bound activity yesterday, although the stock-specific moves were pretty much there. And the sectoral action also kept the ball rolling for the markets. Largely, the crude foil-related move across OMCs, the paint space and all the stocks which use crude as the derivative were in the thick of action in the morning. It was the IT stocks. Towards the end of the session, we also did see some action coming back onto the entire oil and gas and the capital markets related stocks as well. Although the Nifty index did close lower yesterday, that was influenced larger by a decline in the heavyweight counters like Reliance Industries that had reported disappointing profits for the September quarter that pulled down the market sentiment as well in the yesterday's session. Now, overnight, we've seen that the Wall Street indices have also tumbled from record highs. Remains to be seen whether the markets will be able to sustain the momentum that they had garnered early on or will there be a continued slowdown or a range-bound momentum for the rest of the week as well. Especially all eyes will be on the Nifty Bank expiry today. Good morning to all our viewers and good morning, Shail.
Good morning, ladies and gentlemen. A very warm welcome to all of you on Market Today. A tepid and quiet day ahead, perhaps, one on account of the weekly expiry of the Bank Nifty. Remember, all of last week, Bank Nifty has been the top performing index within this space of indices, up 1.4% or about 850 points as the crow flies from the low of 5 days ago and to yesterday's close. So that is something to be looked forward to, that after 5 days of consistent gains on Bank Nifty, it has outperformed the Nifty by a very large margin. The index is likely to either turn sideways or maybe give up some part of those gains as far as the markets are concerned. Apart from that, you have quiet cues that are coming in from Wall Street, but two positives emerge. A further fall in crude oil prices as tensions for a very temporary point of time in the Middle East ease. So crude oil prices have dipped for the third day in a row and they haven't been able to cross the 200-day moving average that they hit late last week. That essentially means that oil marketing companies such as HPCL, paint companies such as Asian Paints and Berger, to some extent even AkzoNobel, as also Pidilite and airline Indigo will be in better health compared with what they were yesterday. This rally has started about 4 days ago. As far as these stocks are concerned, it is likely to strengthen. Apart from that, let's look at the Nifty in particular. What you see is absolutely range-bound trade. It's capped on the top by the 21 EMA and it is getting support from 54 EMA. Actually, ladies and gentlemen, it's the 16th day of October and this month has been a grinding trade for the Nifty. Only option writers have made money because they have sold calls at the top. The Nifty has been unable to breach past 25,200 and the bulls have so far managed to keep 25,000 with them. So it's a very, very narrow trading range. Nothing much is expected because two positives that were looked into the market as far as prices were concerned were a possible rate cut in December, but that's not happening because inflation has skyrocketed, particularly food inflation. So that rate cut is out of the window and that has not enthused bulls at all. So you see prices on the top capped and the downside limited to possibly 24,700. We've been repeatedly telling you that if 24,700 breaks, then this 500-700 point rally that you saw from a low of 24,700 to 25,240 will be a dead cat bounce. Reliance's earnings weren't very helpful for the market and yesterday's fall was primarily on account of Reliance. Nevertheless, 25,000 has held. Let us see what happens today. It's the weekly expiry of the Bank Nifty, where Kotak Bank, Federal Bank and HDFC Bank have been top three outperformers in this index. Kotak in particular is showing signs of further uptick. Let us see what happens once the markets open. But what are the other interesting data that we are watching apart from crude oil, US 10-year bond yield, and of course the markets remaining range bound? What needs to be looked as individual stocks? It's a quiet kind of a market, as Sakshi and I were pointing out yesterday. Really no volumes in top traded counters except for news driven ones like on a particular day Bombay Stock Exchange, on a particular day Mazgaon Dock, on a particular day Premier Explosives, so on and so forth. But overall the juice is missing from the market. We'll be looking at HDFC Life today, ladies and gentlemen. The company, after declaring a fairly robust second quarter earnings, has upgraded its sales guidance to about 18% for FY25 from 15 earlier. We'll also be looking at Cochin Shipyard. Remember, Cochin Shipyard has corrected about 40% from its peak. The government is now offloading up to 5% stake in this company. The government of India owns 72.86% stake, and the price is pegged at about 1540. The counter closed at 1620 yesterday. So bit of a weakness. Today is the day for institutional investors, and if the demand is good, then the government will go up to 5%. But so far the government wants to offload about 2.5% as far as equity is concerned. So keep an eye out on Cochin Shipyard, HDFC Life, and of course you'll also look at the HPCL, BPCL or OMC's paint companies, Asian Paints, Berger, to some extent Axo, and of course Indigo. This is the crude oil trade which is working pretty well in the market. Finally, earnings that are coming in today are from top two-wheeler performer Bajaj Auto. This by far has been one of the most fantastic outperformers in the year of 2024. You have mid-cap IT companies L&T Technology Services and Emphasis, and of course ratings agency CRISIL. These are the four major earnings that at least I am looking at. Let's now get back to Sakshi and try and find out what happened on Wall Street, why was there a weakness, and what looks good.
Right, absolutely, Shail. So in the US market, the S&P 500 closed down 0.76% at 5,815. The Dow Jones also slipped to by about 0.75% to close at 42,740. The Nasdaq Composite was lower at 1% as well. The fall was led by technology stocks after weak sales forecast from ASML as well. Now, apart from this, the Asian indices also tracked the losses on the Wall Street. They were lower in the early trade today. We've seen that Japan's Nikkei fell by most about 1.9% in the early trading session, followed by South Korea's Kospi that traded about 0.9% down in trade. Australia's ASX 200 was down by about 0.4% as well. We've also seen that the Hang Seng and the Shanghai Composite were also lower in the early trading action. So it's a sea of red across Asia, and the Gift Nifty is also indicating to a muted start at 25,043, flat with a negative bias at this point in time as well. Of course, we also have to keep an eye out on how the foreign portfolio investors have been positioned. They've remained net sellers of the Indian equities for the 12th consecutive session, although they have offloaded, their offloading of stocks has reduced to 1748 odd crore rupees in yesterday's trading session. In contrast, the domestic institutional investors, they purchased stocks worth about 1655 odd crore rupees as well. Now, when we actually see the key stocks that you need to keep an eye out on, remember, Hyundai Motor IPO will be entering its day 2 of subscription today. It's only garnered 18% of subscription on the opening day. That's day 1 so far. So a tepid start or slow start for Hyundai. We'll have to see how it goes forward from here. Apart from this, PBR Inox is something that you should keep an eye out on. The company reported its third quarterly earnings with a loss and a consolidated net loss at 11.8 crores for the quarter compared to a profit of 166 crores over a year ago period. The revenue also slipped by 19% to 162 crores. This is driven by a 25% drop in the ticket sales. KEI Industries will be in focus. The cable wire company has reported a 10.3% year-on-year rise in net profit to 155 odd crore rupees for the second quarter. In the same quarter last year, the company's net profit had stood at 140.3 crores, and this has been reported. Now, Tata Motors will be in focus. Jaguar Land Rover has reported a 36% year-on-year increase in the retail sales for the first half of the fiscal year. and that's largely driven by the strong demand for Range Rover and the Defender models as well. The company now expects to maintain this momentum throughout the festive season too. PNC Infra will be in focus. The company has received a letter of acceptance valued at 2268 crores from Maharashtra State Road Development Corporation for a road construction project in Pune, as well as a project worth 2362 crores for construction in Nanded in Maharashtra. Ashoka Buildcon will be in focus. The company has received a letter of acceptance for construction project worth 1127 crores. Cochin Shipyard, as Shail has mentioned, will be in focus again. The government is all set to sell up to 5% stake in the company via offer for sale at a floor price that's set at 1540 rupees per share. So keep an eye out on that too. Apart from this, GR Infra will be in focus. The company has received a letter of acceptance from again Maharashtra government for construction of access controlled Pune Ring Road project worth about 1886 crores. Sansera Engineering, the company has issued 77.2 lakh shares at 1554 rupees a piece to raise 1200 crores via qualified institutional placement or the QIP placement. So keep an eye out on that too. Railtel from the railway space has received an order value at 79.8 crores from Maharashtra Housing Area Development Authority, and the company will need to execute the project by January 15th of 2025 as well. Apart from this, of course, today's earnings will be Bajaj Auto that will be coming out with the earnings. The markets will also be watching for Q2 results from companies like L&T Technology Services, Emphasis, Crisil, 5paisa, among the 16 other companies that will be reporting their numbers. So these are the key numbers that we will be eyeing out on Shail.
And Sakshi, before we get Chakri Lokpriya on the screen, let's look at the research report that has come in on Bombay Stock Exchange by Jefferies. If you have it, let's talk about it. And I'll request the PCR to fire the chart of Bombay Stock Exchange. A note of caution injected by Jefferies as far as this price rise is concerned, but at the same time, Jefferies has also raised its price target. Sakshi, if you have it, over to you.
Yes, so Jefferies has come out with a report on BSE. It's downgraded the stock to underperform. However, it has raised the target price to 3,500. They believe the stock has already rallied over 100% post SEBI's new F&O framework, assuming 25% hit to overall market volumes. BSE's valuations, they say, at a PE of 40 times FY26 estimated earnings implies that the market share is rising from 13% in second quarter to over 30-35%, and now it appears stretched. They also see near-term risk-reward as unfavorable on the Bombay Stock Exchange stock. So these are some of the key highlights that I've got from the report, Shail.
Okay, and ladies and gentlemen, remember, this is a typical pattern in the market where price action is designed in a way for retail investors to enter or buy more a particular stock, and sensible institutional investors book out on valuation moves that are always the most critical thing when you look at how prices move. I'll give you a very, very simple example of how the PE of Bombay Stock Exchange has moved. On 5th of August, it was at 41, and on 14th of October, in a span of 3 months, it's, hold your breath, 104. And I'll give you another mathematical formula for the exit at any particular stock. If the PE of the stock expands by 2.5 times, it's time to bid goodbye. And you know what the rally was at? 42 the PE on 5th of August, and today it's 107.08. If you divide 107.08 by 41.2, you get 2.5. Time to book out, ladies and gentlemen. Jefferies has told you, and we have seen that happening in many stocks, including Cochin Shipyard, including HAL, including Masgaon Dock, including Garden Reach. Do this very, very simple exercise. The expansion of the PE, if it is more than 2.5 times, it's time to book out, at least temporarily. Well, as good a time as any to welcome Chakri Lokpriya, Managing Partner at Red Strawberry LLP. A very good morning to you, Chakri, and a very, very warm welcome. We've been missing you for a while. How has it been going, my friend? A bit of a sideways trend in the market over the last 16-17 days. I'm sure you're getting a much deserved relaxing time over the last 2 weeks. What have you been up to?
Good morning, Shail. Thanks for having me. Yes, always a pleasure to connect with you. Um, you're right in terms of, the market is going sideways because they're trying to find direction simply for the reason that earnings are beginning to get downgraded. Now, you at a Nifty level, the downgrade has been anywhere between 5 to 8%. Now, at a point in time when you were expecting an economic upcycle, which means earnings upgrades, instead the opposite is happening. So the most cyclical sectors, metals, cement, industrials, mining, are all the sectors where we've seen the greatest downgrades. So what is saving the Nifty is the IT and pharma, and to an extent is holding up. So I think what is needed at this point is, I think, an interest rate cut by the RBI, come December, is essential. But yes, inflation, growth, and managing the both. But I think overall the market is not expensive at about 21 times because still the growth is growing slightly faster than inflation.
Indeed, Chakri, and thank you so much for taking the time out. Always a pleasure to be speaking to you to seek some wonderful insights on the markets. I want to actually first begin by understanding from you on Hyundai IPO. I remember discussing it with you before the pricing had actually come in, and we were trying to understand, how will this change the landscape in the Indian automotive industry. Now that the pricing has come in, there are worries about its price to perfection, leaves a very little room for the investors out there, and it's off to a slow start. 18% subscription for the largest ever IPO in India on day one. How are you really looking at it?
You're absolutely right. I recall our discussion earlier. Now, Hyundai is, like Maruti Suzuki, a global company. It enjoys a parentage, a global parentage, and therefore access to R&D and the latest trends, technological trends that are happening outside globally. Now, that is important in the car industry, which is going through a massive change. Electrification, battery storage, etc. And Hyundai is the second largest player in India after Maruti. It has about 13, 14 models. And then importantly, it has one, access to R&D of the global Hyundai. Second, it is developing battery storage technologies within India. And three, it also has a range of EV models, which will further future growth. So if you add up all this together, the company is trading at will trade at the IPO price at about 22, 23 times. It has a profit growth north of 20%. So for a company as large as Hyundai to trade at that kind of a growth and with an ROE which is in the 20s is a very decent number. With all this in mind, I think one should subscribe to the Hyundai because it still trades at will trade at a discount to Maruti.
Ladies and gentlemen, just a note of caution. Hyundai's IPO comes at a time when Indian valuations are stretched, and of course it's the largest ever that's hit Indian shows, 27,000 crore rupees. This entire money raised by selling 17.5% equity to Indian shareholders is going back to South Korea. Not a single paisa is being used to expand business, and what the South Korean giant has done over the last 18 months is taken out a lot of dividend, a lot of royalty, and at the moment Hyundai, if it wants to expand, it will have to borrow money from Indian banks. I'm sure that's a good thing ahead, but it's always better to read the DRHP once you see this kind of a huge issue coming at the top of the market. Please be very careful. Even if you apply at the lower price band of Hyundai. With that, ladies and gentlemen, let's take this discussion forward with Chakri and listen to his views on Reliance. A bit of a disappointment on RIL as far as O2C and retail business is concerned, Chakri. Although the bright spot was the very sharp rise in average revenue per user as far as the telecom business is concerned, up 9.2 at about 192.5. How do you analyze RIL? And below 200-day DMA, about maybe 13-14% off its all-time high. Is RIL an opportunity to buy?
You raise good points, Shail, in terms of if you look at RIL, there are three, we largely break it down into three companies, three divisions. One is O2C business, retail, and third is the telecom. And of course, the fourth one is the new energy business, for which the market valuation is still not evident. Now, O2C is still at a cyclical low, and given with the cyclical low for two very simple reasons. One is the Ukraine, the Middle East. Second is the Middle East war. All these kinds of uncertainties have put oil prices and gas prices at a very volatile range. And therefore, the margins in this type of environment are very difficult for companies to make because they don't know where to hedge their positions. So until that uncertainty, and that uncertainty will kind of go away after the US elections because it also coincides with the end of the winter, US and European winter, January, February types. Second is the retail. Yes, it has kind of slowed down, but still is holding up well. And the third is telecom, which is actually fine. It'll gain at the problems of Vodafone and even Bharti to an extent. So now the fourth. So if you add up all this together, the stock price is where it should be. Now, new energy is not at all there in the valuation. Therefore, that provides the upside. So if you buy Reliance, you won't really, it's unlikely to lose money at these levels and would make money over the medium term.
Okay. Well, apart from Reliance Industries, we should also focus on the IT space as well, which is in the thick of the earnings season right now. We have seen at least two of the companies come out with their earnings from the big wigs right there. HCL Tech has definitely surprised on the positive side yet again. How are you looking at this IT space as of now? Yesterday we did see, a spring of action in the first half, but that rally could not sustain. The momentum could not sustain in the IT space. Are investors still being on the sidelines when it comes to IT, keeping in mind that the global recovery probably still is, not as confirmed as they were actually hoping it to be? Or do you think now is the time or the best time to actually lap up some of these IT stocks for the portfolio? How would you really look at this space?
If you look at IT as a space, usually at that point when the US interest rate cycle starts cutting rates, is usually a good time to buy. But in the current environment, you add a new twist to the story, which is the US elections, in sometime in November, and the new president comes into power, assumes office in January of next year, 2025. So, which means until then, and it's a very tight election race. And until no company is going to take any big steps until, let's say, middle of January. So, which means the usual guidance given by all the IT companies will be slightly more subdued until the elections are over. So, it's not a normal quarter update now. With all that in mind, whichever government comes to power is unlikely to hold back on IT spend. So, I would kind of nibble into all the IT companies for sure, because there's not much downside at current levels.
Actually, it's a slow grind across the globe. Everybody wants to find out, what the ultimate outcome of the US elections is, and it's a very, very tight race. The other the other issue is, of course, the Middle East issue, and that has capped prices on the upside. Chakri, what have you been advising your clients in terms of overall cash positions in the portfolio? Have you raised them as a percentage of AUM in the last 10-15 sessions, or are you fully invested?
We typically maintain about 4-5%. So, but outside of that, not really raised cash levels, because What we are seeing is basically there is sufficient sector level trends are no longer there. I mean, last year you couldn't buy defense as a sector, for instance, whereas now you can't. It's less likely to do that. You have to look more for individual stocks. So I think now the key is basically within that to look for companies where there's earnings growth. Where there's earnings growth, is not very surprisingly still the power sector is holding up. The utilities is holding up. Some of the ports, some of the very deep cyclicals are holding up, whereas the other companies are seeing down trends. So I think that's the way we are approaching it.
Okay. Apart from this, let's also discuss one more space with you, Chakri, and that is the entire retail and the e-tail space. Now, there has been some interesting conversations over the last few days and weeks where we have seen the leader of the pack, the erstwhile favorite D-Mart, seeing some slowdown and huge competition from the quick commerce space. Zomato is continuing to surge higher on the back of Blinkit. There is more competition now coming in with Swiggy IPO, and that also coming with Instamart now a focus there. Trent has now overtaken D-Mart in the retail space in market cap as well. How are you looking at these new permutations and combinations in the retail versus e-tail space, and where do you think this story is headed if somebody wants to keep a pie of the portfolio within this pack?
You raise some very nice points, interesting points of how the industry is evolving. If you look at Trent as a company or the space, retail, apparel retail, still, people love to go out, test, wear the clothes out, see apparel, and then look at the trends. So there, in those kind of places, footfall still do matter, and therefore the valuations will hold up. And for instance, companies need to be at the forefront. For instance, Trent is introducing the carbon diamonds. Now that's an additional reason why one would want to go out and shop. On the other hand, which means the valuation for those companies like Trent can hold up, even though they're very expensive. On the other hand, if you take a D-Mart type of companies, now the quick commerce is taking away very quickly, because if you take Zomato or Swiggy, their quick commerce business is undercutting prices of groceries and other basic items by anywhere between 20 to 30% of the MRPs. Now, this is with the pure thing to take market share. I don't think the trend will hold out much longer because these companies can't burn cash much longer. But meanwhile, the D-Marts of the world will lose margin and therefore have to trade at lower multiples.
Okay, ladies and gentlemen, the pre-open is with us. It's a mild backtick. The Nifty is now testing 25,000, down about 42 points. Let's look at the pain points here. TCS at the immediate start, 3.5% lower, 39.67. This is not looking good. It's HDFC Bank, ladies and gentlemen, which is helping the Nifty despite this weakness all around. And this is really good news. On weekly expiry day of the Bank Nifty, if HDFC Bank is in the green, that essentially means that the index will also remain strong. 22 rupees higher, 1706. I also want to see what Kotak is doing. Okay, Kotak has slipped 18 rupees lower at 1877. Kotak was the best performing Bank Nifty component, up 6% in the past 5 or 7 trading sessions. Things are improving for the better. Let's look at what Reliance has in mind. 16 rupees higher, 2700. So Reliance and HDFC Bank are in the green. Let's look at Infosys in the green. That's a positive for the Nifty. And finally, ICICI Bank. ICICI Bank is 43 rupees lower. This is a bit worrisome. 3.5% down, 1212. Let's see how prices settle in the Nifty as far as pre-open is concerned. But so far, 25,000 has held. Now let's look at individual stocks. The crude oil trade, BPCL up 1.1, Asian Paints up 0.5%. You have HDFC Life upgrading its top line guidance, up 0.7%, 720. Bharti Airtel has a earnings upgrade 1% higher, 1735, and I want to see what BSE is doing. I'll have to look at a different format to check out BSE. Okay, just 0.25% lower, 47.40. Jefferies has come out with a report where it has upgraded the price, but advised extreme caution as far as valuations are concerned. Shriram Finance 1.3% higher. Very quick look into NSE 500, then we'll get back to Chakri. In terms of top gainers, ladies and gentlemen, you have a good stock that I may want to mark. Yes, Maharashtra Bank 2% higher, 54.40, and I want to see what Cochin Shipyard is doing. This is the OFS baby today, 3.4% lower at 16.15. The offer for sale price by the government of India is somewhere like 15.40, the base. So this is what is happening in the markets, a flat open. Let us see how banks perform on the weekly expiry day of Bank Nifty. Chakri, coming back to you, a quick view on pharma. Fabulous moves that we've seen in large, mids and smalls. Is this an overheated space now, or do you still find value? What is your top pharma pick in your own portfolio?
Yeah, pharma as a space, I think has run up quite a bit, but still it's okay because these are companies which earnings visibility is still out there. But that as a space, we have some in Mankind Pharma because it has a what you call consumer presence, and therefore you can afford to give it a multiple. But outside of that, we don't have anything meaningful in pharma as a space. Of course, we do hold hospital companies. Apollo Hospital still looks good, but not the pharmaceutical companies.
Diagnostics chains?
Okay. We hold the hospital companies. I think, whether it's an Apollo, all these companies, still there's ample growth. The EBITDA multiples, while expensive, are still okay. And the cyclicality of the business is low. All those things are good in this kind of a market. Diagnostic chains have the still fair share of problems despite correcting quite a lot.
Okay, got it. Let's see what else is buzzing in the pre-open trade. PNC Infra, it's up over 2%. Remember, it's got orders worth 4,600 crore rupees. And GR Infra has also got an order worth about 1885 crores. This stock is also up by about 2.2%. This is again from Maharashtra, a slew of projects that were rolled out by Maharashtra as well. And therefore, we see even RailTel buzzing in action. That's also got an order worth about 80 odd crore rupees as well. So that's about 1% up in trade right now. When we look at some of the other stocks that are in focus today, let us also look at, Reliance India is something that's really reacting positively to its earnings. You can see a sharp move of about over 11% in the pre-open trade for Reliance India. This is on the back of EBITDA improving by 24%, revenues surging by 11% on a year-on-year basis for the company. That stock is also surging in trade. Then let's also keep an eye out on some of the other stocks like an HDFC Life that has now raised the guidance of the APE growth to 18 to 20% versus 15 to 17% earlier, and therefore that stock is also in focus. Yes, over 1% higher in trade for this too. These are the key stocks that are buzzing. Let's look at Zomato that we were discussing a bit earlier, and also DMart. Zomato has got another buy rating from UBS with a target price of 320. No momentum right now. 279 is the current level. Avenue Supermart, it's got a downgrade to hold from HSBC, where the target price has been slashed to 4,500. So let's see how DMart is also moving. It's flattish with positive bias as of now. So no impact on that one as of yet. Let us also look at Ashoka Buildcon, Sansera Engineering. Again, these were the stocks that have got some earnings reactions going. Okay, let's also discuss one more interesting space with Chakri, and that is the FMEG space particularly. We are headed towards the festive season. This has been a space which has obviously proved itself for investors in the recent past as well. Now, Morgan Stanley has come out with a report on the FMEG space. They have upgraded Voltas to overweight. They expect higher earnings going forward. They also are optimistic on the margins expansions there going forward. Bajaj Electrical still underweight, although they believe there is a lower earnings visibility. KEI Industries came out with a decent set of earnings, 10% higher in trade. We've again seen Polycab come back into action, getting away from the ghosts of the past in terms of the regulatory actions. How are you looking at the FMEG and the wires and the cable space, specifically when we talk about the festive demand that could be pulling these stocks higher?
If you look at that space, clearly there are a number of trends emerging. If you companies like Voltas, Blue Star, they're all benefiting from both domestic as well as commercial upticks. Now, so for going into the festive season, I think, and also each of these companies have launched their own share of new products. Voltas has launched all the Bico products with Alliance, a new Alliance. On the other hand, if you look at the KEI, the cable companies, many of these companies are getting into a number of adjacent businesses, and therefore the margins are going down. Look at KEI, revenue growth, the much higher, 15, 18%, whereas bottom line about 10%. So down the income statement losing margins, and therefore I think it's run up quite a bit. I would buy a Voltas, but stay away from a KEI types.
Okay, 909, and just the right time to welcome Mitesh Panchal. The markets have started Wednesday on a back foot. Remember, it's the weekly expiry. Nifty down 45, trying to sort of see strength around 25,000. Nifty Bank down 200 at 51,711. A back foot on the IT index as well, and the Nifty 500 too. Welcome, Mitesh. Good morning. How do you look at this slow grind that is happening in the market? It's like that, liquid oxygen joke which that erstwhile villain used to have, Ajit. इसको liquid oxygen में डाल दो, liquid जीने नहीं देगा, oxygen मरने नहीं देगी. Is that what is happening to Nifty?
Good morning, Shailji. Good morning, Sakshi. Good morning to the panelists. You have narrated it beautifully, but the fact of the matter goes like this, that we have seen a one-way downfall. So frustration period and consolidation is a part of the market. So if you look at technically, now let us talk about the levels, and let us talk about where the market probably will find a very strong support, and we can see that now the bottom formation here, and probably we are turning the tide on the upside. So if you look at the recent low, which the Nifty has formed on 5th of August 2024, from that a high which is formed on 27th of September 2024, 50% retracement comes at 25,085, 25085. And for the past 7 trading sessions, only for a single trading session, that is the trading sessions dated 14th of October 2024, Nifty managed to close above that. So we need a close above that level, that is 25085, for 2 consecutive days in a row. Unless and until if that is not happening, then in that case, the range will be 24,900 on the downside and 25,000 on the upside. Now let's talk about the trend reverse level on the upside. We are of the view that 25,371 is a trend decider level. Unless and until if Nifty is not crossing 25,371, we are into a broad range. So here we are talking about a pretty broad range, 24,900 on the upside, 25,371 on the downside. And yes, in this frustrating range, market जीने भी नहीं देगा और मरने भी नहीं देगा. लेकिन within this, I think a very strong buzz is going on with respect to certain small and mid cap counters where there are phenomenal opportunities.
That's exactly what we want you to tell our viewers. Where exactly are these opportunities being seen, and where are you also placing your bets afresh in this slow grind in the markets? Any key stocks that you can share, Mitesh?
Yeah, so 2 stocks. First is Voltam. If you look at the chart pattern of a Voltam, recently it has made a low at 11,300 for the week ended 11th October 2024, and then it take a U-turn. And since last 2 to 3 trading sessions, stock is forming a higher bottom formation. So vol temp at 14,099 is a buy with a stop of 12,500. First target will be 16,000, followed by 17,000. Second stocks which we like the most is IDFC. So if you look at the chart pattern of IDFC, it is looking promising at the current level. The stock is trading at 108. We are of the view that the stock is very close to its bottom. And going forward, once the stock crosses 110, stock will enter into a new trading range and the stock will surprise on the upside by clocking 130, 140 levels. So at 108, IDFC is a buy with a stop of 100 for the position target of 130 and 140.
Okay. Mitesh, a view on Reliance and a view on Bombay Stock Exchange. Both of them on the opposite ends of the spectrum. Reliance below 200 DMA, how should I say, sulking post earnings, and Bombay Stock Exchange, vibrant buoyancy. What are the charts telling you?
So you pick up the extremes on both the sides. As far as Reliance is concerned, since last 3 weeks per se, lower top, lower bottom formation, and the same formation has witnessed in the month of July 2024. But after that, we have seen good amount of a rally. So I am of the view that as far as Reliance is concerned, it is very close to its recent bottom, that is 2,645, which it has formed on 25th of January. So here I will play the stock as a bounce. I will buy at the current level with a strict stop of 2645 just for the sake of a bounce with a target of 2800 and 2850. So yes, since the stock is available at a very attractive risk reward ratio, we'll buy at the current level. As far as BSE is concerned, again, it is like it reminds me to the rally of Musgao Dock and Garden Shipyard, where it's a one-way rally. So approach BSE only with a trailing stop loss. As long as the party is going on, enjoy it. Once the trailing stop loss is, get out of it. And what is your trailing stop loss? Is the last week low, or if you want to go on a shorter time frame, then the earlier day low will be your stop loss as far as BSE is concerned.
Right.
Okay, ladies and gentlemen, let's look at the opening quotes. Nifty down 45, IT index down 215. Nifty Bank on its weekly expiry day is down 100 points, nothing to be worried about, and flat trade on NSE 500. Ballpark, it's a red screen, and let us now get back into individual stocks. We'll start with BSE because that is what Mitesh has highlighted. Now 3.2% lower, 45.95. Let us see till when does this dip continue. Now coming back to the main stocks. Okay, TCS 35 rupees lower, 4082. I want to see what Reliance is doing. Down 11 rupees, 2677. How about HDFC Bank? Flat, 1684. How about ICICI Bank? Down 5 rupees, 1250. How about Kotak? Down 6.5, 1888. Infosys is down 12. So it's not looking good as far as Nifty bulls are concerned. Let us see for how long 25,000 holds. Now let us look at counters where news is there. HDFC Life 0.5% higher once it upgrades its sales guidance, 717.3. It's a green tick on CDSL. Watch CDSL instead of BSE. Probably you will be better rewarded, 1.5% higher, 1606. Top gainers in the NSC. PNC Infra, as Sakshi points out, it's an order win, 4.6% higher. Railtel order win, 2.4% higher, 418. HPCL is crude oil trade, 2.7% higher, 434. And of course you have Maharashtra Bank up 2.5%, 55.6. Mitesh, coming to you, is the crude oil trade still active in the market? Would you want to step in at HPCL, BPCL after 2 or 3 day rally, or is enough? What would you do in the first 1 or 2 minutes of trade?
Yeah, I would like to go with IOC rather than HPBP. If you look at the chart pattern, I think 170 is being maintained in early few minutes. So I think that is a promising sign as far as 1 and 3 minute charts are concerned. Though we don't look at such a short time frame, but looks interesting in the opening hours. So with a one stop of 168, we can go long in IOC for the potential intraday target of 175 and 178.
Be at the top spot when we talk about the Nifty gainers, 1.6% higher. IOC is also pulling up 1.8% higher in trade, and HPCL continues to be about 4% up. Coal India, Hindalco, SBI Life, HDFC Life and Power Grid are some of the other winners in the markets right now as far as the Nifty movers are concerned. The oil and gas index is definitely the top performer right now. When we talk about the PSU banks, they are pulling up in trade about 0.4%. Metals, infra and small and mid caps also seeing some gains, but the rest of the sectors have slipped into the red, with the IT space now down by about 0.7% and followed by FMCG, auto and the private banks that are still lower in trade and not participating in the markets as of now right here. When we talk about the Nifty draggers, you see M&M, TCS, Ultratech Cement, Nestle and Infosys. So some of these IT space stocks that are on the back foot in the trade today as well. Let's get in Chakri into the conversation now, especially on the insurance space is something that I wanted your reviews. HDFC Life came out with the earnings from the private sector, raised the guidance for their total APE as well. They also expect there is continued momentum in the value of new business that they are seeing, and they will also see this business double every 4 years as well. How are you looking at the insurance basket? This has had a good amount of moves in this year so far. How will the things change here, and what is your preference?
Insurance as a space, I think, Shailji's analogy of Ajit's joke, oxygen, holds up here also. Because, it's a volume game. What you gain in volume, you lose in margins. And then you have a regulator who's coming on the back of saying, lower your margin, lower your margin. So if you're a good trader, they are absolutely yes, but these are not buy and forget stocks.
Okay, ladies and gentlemen, 9:20. Let's just dig a little deeper into the market. The first 10 odd minutes are a little volatile as always, but I'll request Mitesh to keep the chart of HDFC AMC ready. There is a very, very strong breakout happening there. Now, let's dip into the broader markets. Okay, Sakshi and I tracked 19 indices for you. Out of 19, just 8 are in the green. We are led by losses on the IT index, 0.5% lower. FMCG index 0.6% lower. Look at the advanced decline ratio, 1250 stocks in the green, 900 in the red. So it's not really so good for the bulls, but still in the green. But look at the main indices. IT index is down now 260 points. Let's look at what is rising. It's the energy space, mainly on account of BPCL, HPCL, IOC. Metals mildly in the green. I won't be looking at long side trades. I think two stocks make very good sense at this point of time. A breakout that's happening on HDFC AMC. This is again the AMC broker space and the capital market space that is doing well, and CDSL. To you, Mitesh, between two of them, what looks better and what would you be doing?
As HDFC AMC is concerned, I think that looks better because the chart is very promising. Looking at the weekly and monthly chart above 4,720, it's a clear-cut confirmation of the trend, and stock is maintaining that level in the morning hours. So probably this is the beginning of a new trend or a trend reversal, what we say in our terminology. So 4720 is very well past today. Hope the stock will give a close above that, and in that case, the stock is opening up a range for about 4980 to 5050. So yes, between these two, my preferred pick is HDFC AMC at the current level. I will go long in that stock.
Okay. Let's also look at the broader markets to see some interesting names right there. Remember, Reliance India, I pointed out on the earnings front, 11% high is what the stock is really trading at. We also have some other stocks, IFB Industries, that's up by 16%. Landmark Property Developers, 6%. I'm just going to be naming all the stocks from various sectors, but those which are actually garnering some momentum. Prakash Pipes is up by 7%. J Street Tea is up by 5%. You also have stocks like Panacea Biotech that's up 5%. 20 Microns is also up by about 5 odd percent in trade. And Pondy Oxides is something that you should look at. I think the stock, it's the record date for the 1:2 stock split for Pondy Oxides. Remember, this is a multi-bagger story within the metals pack for this year. This year so far, the stock has already rallied over 320%, and even the stock last week, I think, was up by about 10 or 11% as well. It went up above 2070 odd levels, and now you can see the price at 1055 after the 1:2 stock split as well on Pondy Oxide. So keep an eye out on that too. Mitesh, anything that looks good within the metals pack for you?
Not exactly, because in the metal pack still we are waiting for the confirmation. Only VDL looks promising, but again above 510. The stock is trading at 493, so it's far away from that level. But once the rally will resume, Sakshi, in the metal space, I think it is going to be a marathon run this time. Technically, at least we can see 10 to 15% upside, but we'll have to wait and watch. So let's wait and watch for the particular level.
Okay, let's look at now what is buzzing on the long side in terms of good moves. Sakshi's pointed out Reliance India. I'll again highlight it's a blowout on price as well as volume, up 10% after a fantastic set of earnings, and the volumes today are the highest since I would say at least 40 sessions. Mitesh, would you buy this gap up or would you stay away?
We'll wait and watch, because I think second half will be very interesting for me to see. And apart from that, the first hour, the hourly candle is very important. So I'll not buy this gap up. We'll wait for the more confirmation to come in.
Okay. Let's look at the record highs in a market which is on a sideways trend. This will give you an idea where money is moving in. HDFC AMC, record high. We have another counter, Elecon Engineering, 5-star NBFC, Oberoi Realty, and of course Dixon Technologies. So out of NSE 500, we have about 5-7 stocks that are hitting record highs, and there is Aditya Birla Real Estate Limited, which is recently listed at 2,915. That is also at a record high. We'll have to analyze this a little later, but these are the stocks from the real estate space: 3, Oberoi Realty, Anant Raj, and ABREL. And of course, the MNC space, AMC space is buzzing. Let's get Chakri into the conversation. Chakri, within the listed AMC space, which is HDFC AMC, Aditya Birla AMC, UTI, NAM India, would you have a favorite?
You know, all these companies are actually looking all right. Within them, I think it's probably not HDFC for sure, but I'm kind of unsure, because what's happening is that this industry is converging. All of them have come down to very similar margins. There's the regulatory pressure on top of that. So I think this as a space, so you can do a trade, maybe an HDFC AMC, because there is sufficient momentum. But outside of that, it's not a buy and forget investment.
Okay. What about the capital markets related stocks, Chakri? Where are you really looking at for continued momentum after having some stellar moves in the recent past? Does BSE really continue to be promising to you? CDSL, we've seen Angel One, the way it has reacted post earnings. Stocks like JM, GOG, they have all been re-rating in the recent past. How are you looking at this entire space, and where do you think investors should keep their focus on?
JM still probably has valuation-wise a comfort. On the other hand, Angel One, yes, is growing phenomenally well because if you're not just adding customers, but those customers are also trading more. So that has been the good news for Angel One. JM, I think, for this as a sector, I think the volumes are on their side. FNO volumes, etc., all will come down 20-30%, but that's kind of factored in.
Okay. 9:28, ladies and gentlemen. It's like I said, a slow grind. The Nifty is not allowed to fall below 25,000, and it's now not allowed to rise above 25,100, 25,200. Let's look at some outperformers in the market in terms of volume. I think Reliance is showing signs of activity, a third of a percent higher. Nevertheless, Nifty remains in the red. But yes, this is the right time to bottom fish on Reliance. Let's look at volume buzzers in the first 10 minutes. GR Infra and PNC Infra we've already marked. Now this is interesting. I'd like Mitesh to take a look at BEML 3962. This is a chart which requires the intelligence of Mr. Mitesh. Let us see what it is trying to tell us. Mitesh, BEML 3926, 3972. What do you think are the charts telling you?
Shailji, it's a trend reversal because if you look at the chart, it's a one-way fall from the level of 5,488, which it has formed on 5th of July 2024. Recently, it has formed a bottom at 3,424, and today's move is nothing but a trend reversal. I am of the view that the recent high 3905 has been very well taken over today. So yeah, one can go long even at this level with a target of 4186, which is a high on 5th of September. So the current rally will continue till 4168. For the stop, you can use 3691.
Okay. Let me also mark RailTel 3.5% higher, 425. And of course, today is the day when the other parts of the AMC broker space, apart from BSE, will be in action. BSE is now slipping 4.3% lower, a much needed correction. Let us see for how long it sort of slips. But look at CAMS, look at CDSL, and of course AMCs we've discussed. CAMS is coming back into action. Mitesh, what are the charts telling you? 4740.
Very strong. In fact, as a disclaimer, last week, our system and method has identified the stock at around 4,600 or so. So, as a disclaimer, our clients might have direct or indirect position into the stock. Very strong setup strategy on technically. So, the current rally, the stock is likely to test 4950 One should go long even at the current level. Stock is trading at 4720 in cash segment.
Okay. You know what is long forgotten is the PSU banking space. Chakri, some moves coming back into some of the stocks like UCO Central Bank, PNB, PSB as well. We have Bank of Maharashtra that came out with the earnings and therefore after that too. But the stellar moves are a thing of the past here. What should be one's approach to the PSU banks in this absolutely lackluster momentum that we have been seeing for a long time now in the PSU banking story?
Yeah, absolutely right. But the good news is, so going with our oxygen story, you buy an SBI, you can't go really wrong. They also, they're going to do some ATI bonds, so which will strengthen their capital base. They trade at about 1.2 books. So if you hold it for a few 2-3 months, it'll probably go to 900 something. The stock. So SBI and maybe Canara Bank. Again, similar story. Valuations are cheaper.
Okay, got that. So that's as far as the PSU banking story is concerned. How about the private banks then, Chakri?
Private banks are stuck in a range fundamentally. HDFC, good old problems. They still have to match their LDR, the ratios, ICICI, and Access, the valuations are already there. So, unless we see credit growth coming through, which is not going to unlikely to happen until credit rate cycle starts, so I think they will also tread water.
Okay. Sakshi, let's discuss Kotak, and for a very different reason. But I want to first take Mitesh's opinion on Kotak. Mitesh, we've waited for this stock to deliver for the last 5 years. Absolutely nothing has happened. In the long term charts that you check, maybe monthly, quarterlies, is there a positive change that is happening? And then I'll mention the Canadian Pension Fund link. But first to you.
Sir, whether you talk about quarterly charts or whether you talk about yearly chart, the music remains the same since 2022. As long as 2064 has not been taken out, which is 2023 high, to be very precise, 2064.40. So let us put around figure 2065. Unless and until if the weekly close is not about 2065, the stock will sing the same tune. No fireworks. If you look at any chart pattern for that matter, quarterly or monthly, it's in a broad consolidation zone. So let's wait and watch. Probably I have witnessed this thing in my life that when any stock moves on such a big consolidation zone on a yearly basis, whenever the breakout comes in, it will be a multi-year rally. So I think as far as private bank is concerned, I think Shalji, we have also discussed this earlier. One should have sufficient allocation to both HDFC Bank and Kotak Bank and be prepared for the frustrating time for the next 2 or 3 quarters. But once the rally will start, believe me, both the stocks will give a phenomenal return.
Okay. Now here is, ladies and gentlemen, a point to note. India and Canada are having a spat on the diplomatic part of their relationship, and Canadian Pension Fund holds about 3.4 crore shares of Kotak Mahindra Bank. In March 2024, it held 2.68% stake. In June 2024, it reduced to 1.65% stake. The September numbers are yet to be had, but this is an overhang that is now there on Kotak Mahindra Bank. In September 2021, I want you to hold your breath. Canadian Pension Fund had 6.3% stake in Kotak Mahindra Bank. Over a period of time, they've been reducing it, and the pace of reduction is now rising. This is not to inject or inculcate fear in your mind. This is pure data. Between September 2021 and June 2024, FIIs held 42.5% stake in September 2021, and now they hold 33.16% stake. So about 9 percentage point FII holding in Kotak Bank has been removed in this sideways zone, which is continuing for the last 4 or 5 years. And this is also a time when you see a lot of problems with the regulator that Kotak has undergone. With that background in mind, please keep Kotak also on your radar, as also Zomato. The Canadian Pension Fund has 10.4 crore shares of Zomato in its holdings, and that is also something that I would like to bring to your attention in terms of what the market is thinking as far as these two particular counters are concerned. Let us see what Canadian Pension Fund had earlier. I'll get that data for you, but please do keep these two thoughts in mind. Sakshi.
Right. Chakri, anything that you'd like to say as parting words before we let you go? How do you see the Nifty really panning out till the end of the year now? We've actually seen, do you think we have seen the best of it?
I think there's still growth out there because, we'll get the catalyst of an RBI cut towards the end of this year. And so and meanwhile, sectors like power, Sterling Wilson, fantastic numbers. Companies like that will continue to make us returns.
Okay, wonderful. Well, thank you so much, Chakri. Always a pleasure to host you. Thank you so much and hope you have a fantastic time till the time we meet you next on air. We'll continue to focus the discussion on markets, viewers, on the markets with Mitesh now. Mitesh, oil and gas continues to surge even further, 0.7% higher. It's the top moving index. Metals follows. Financial services, PSU banks are the other spaces that are seeing some traction right now. If we look at the F&O space, apart from HDFC AMC that both you and Shell have discussed, Voltas is picking up pace, 3% higher in trade. As we approach the festive season, do you think focus should be there on such consumer durable names?
Possible, and that is what is reflecting second highest gainer in the F&O space. So let us talk about technicals. 1850 is comfortably taken out. 1880, one should go long at 1880. Stop loss should be placed at 1840. Potential target for today and tomorrow 1920, 1950. Very good setup. Even the 15-minute chart advocate that stock will have very strong up move in next two trading sessions.
Okay, 9:40, ladies and gentlemen. Let's look at the chart of BSE. Now 5.6% lower, and believe me, this is a much needed correction. We were fortunate to catch this trend at 2200 on the stock when it had bottomed out conclusively on a day when the most negative possible news that could come on a particular stock from SEBI had come in, and now from 2200 it went all the way to 4800 in a span of, I think we were 2200 on 23rd of July and we are 4900 on 16th of October. So that's roughly, let me just count the days, but now 5.6% lower as far as prices are concerned. Yes, it's a span of 83 days in which the stock has doubled. Okay, let's look at one more, and I am actually looking out for a reason to find out why Ambuja Cement is the top traded counter by volume. Let me just find that out. But Mitesh, 900 crores traded on Ambuja Cement, which is a huge number. Do you see a breakdown happening on the charts?
Not exactly, Sailji. If you look at the chart pattern, I think stock is in the process of forming the bottom. So if you are looking at purely the chart, since last four trading sessions, stock is defending the level of 582. And even if you are looking at the chart of today, probably that is what the chart is advocating, that the stock is not ready to fall below that. 589 is what the stock is trading at. So I think it's in the range of a bottom formation. Stock will pick up space only if the stock moves above yesterday's high of 597. So it's like 580, 285 on the downside, 597 on the upside. So that is a small range in which the stock probably will going forward behave. But if it takes out 597, it's a marathon run then, and then in that case, the target will be 643. So please watch out for this stock. Sooner than later, the breakout will take place in this counter.
Okay, got it. Now let's focus on the small caps then. Mitesh, some action returning to this space. BEML, an erstwhile favorite, is also jumping in trade, 5% in trade today. That's the top moving stock here. Sterling and Wilson, remember, Chakri just spoke about it. He continues to believe in the story. The stock is up 4.7%. You have Action Construction Equipments, that's up by 5% here. Inox Wind continues to be in the thick of action from the renewable energy power space. HBL Power Systems, that's up and about too. You have stocks like Amber Enterprises, NCC, Rights also pulling up in trade. Various stocks from some of the related sectors now coming in. But BEML particularly for you, Mitesh, right here. How are you looking at the chart, and is there any space for investors to still catch on?
Yeah, I think Sakshi, the same stock we had discussed just before 15 minutes with Selji, and the outlook remains the same. The target is 4,200, 4,500 on the upside. What is looking promising? I think last time I had a discussion with Selji with respect to four AMC stock, ABB, Siemens, and Honeywell. And if you look at Siemens, it is trading at a 52-week high. And within the same 52 high space, what is looking more promising is a pharma space that is woke hard. Surprisingly, now cross 1000 level, trading at 1119. I am of the view that a rally has second leg of the rally has started, and in this rally, you will see success stock trading at around 1300, 1400. So right now, keep an eye and buy hard at the company.
Okay, keep an eye out on Wockhardt Pharmaceuticals. That's the view that's actually coming in. The stock is now at the day's high level, 3.5% higher, 1118 can be seen on the stock. Some stellar moves have actually come in over the last 2 months or so on the stock as well. Within the FNO, what else is pulling up is Vodafone Idea as well, 3% higher now. Mr. Kumar Mangala Birla has come out and spoken positive about the outlook going forward. We do know that the stock had been faltering, but today it's up, probably getting some enthusiasm from what has been spoken. 9.3 rupees is the current value. Anything that you can suggest on Vodafone?
Nothing's actually better to avoid the stock.
Okay.
Uh, it is not promising. I mean, whenever the stock is moving about 10 or to 12 rupees, you see an attraction of sellers. So if you have the stock in the portfolio, be careful with the stock and try to exit at a reasonable rate. Probably much better opportunities available in the markets, actually.
9:44, ladies and gentlemen. Let's now start looking at some other action in the counter on the negative side. The Nifty is back up in the green. 25,000 test has been held strongly. And let us look at the contributory stocks that are helping the Nifty overcome this major selling pressure. HDFC Bank contributing 18 points. Reliance back above 2700. Remember, it is the pain that you should try to purchase and sell froth. Therefore, we check Reliance on the long side and we check BSC on the short side. Bharti Airtel 8 points on the green as far as Nifty is concerned. Axis and Hindalco 4 and 3 points respectively. What is pulling the Nifty lower? Okay, M&M, Infosys, TCS, Kotak and Maruti. I won't be bothered about any one of them. M&M and Infosys are at record highs. Kotak has been doing well for the past 1 week, but nothing much to talk about. And of course, Maruti slipping 0.5% lower, 123.74. I want to highlight some stocks that are slipping in trade. KEI International 5% lower, 44.54. We have BSE, which we've already highlighted. Angel One, yesterday's 18% rally has now met with profit booking, and rightly so. 3.5% lower. Already 600 crores worth of transactions on Angel has happened. Yesterday the volume was more than 5,000 crores. So still a lot of hectic activity afoot. What else is happening? Cochin Shipyard 3% lower, 1622, and these are the only stocks that I would like to mention from the ones that are slipping in trade. How about new highs? HDFC we've marked, 5-star Finance we've marked. Mitesh, you obliquely mentioned Siemens just a moment ago. Last week you had highlighted ABB and Siemens on the long side. Today a fresh high. And of course, stocks such as Greaves Cotton, 2% higher, 194. This is a stock that needs to be looked into. And we have a strong move coming into another transformer company, Indotech Transformers. Remember, Mitesh's top pick today morning was Voltamp Transformers. So another 5% on Indotech after yesterday's 5% uptick. So these are the stocks that are buzzing in trade on the volume side as well. Sakshi, what are you watching?
A whole host of stocks within the mid caps also that are pulling up now, Shail. We have PB Fintech that's up by 2%. We have Poonawalla Fincorp that's up 1.5%. Then you also have stocks like Bharti Hexacom that's now up 3% in trade. I think mid caps have recovered nearly 245 points from the day's low as well. So the action is returning on these mid-cap counters. We have a APL Apollo Tubes that's also pulling up in trade. Some stocks like Cummins India that's are up and about. Max Financial Services. Of course, financial services as a space is garnering a lot of attention as well. Some of the railway-related stocks are definitely in the thick of action. We discussed RailTel in the morning. Rights moved. RVNL that's also pulling up in trade. Mitesh, anything that gives you enthusiasm in the railway space as of now, or is there still a long way to go for the recovery to happen?
Exactly. That is the right way to put it, the entire railway pack. Long way to go. Wait and watch for the consolidation. Maybe there might be a breakdown going forward. So please wait and watch. But there is a very interesting development, Sakshi, in some of the Tata stocks, Tata Group stocks. So case in Tata Elxsi and Tata Teleservices. These are the two stocks in which the earlier confirmation of the chart has took place, and probably in the next few trading sessions, both Tata Tele and Tata Elxsi likely to perform on the upside. So please watch out for these two stocks.
Okay, Tata Elxsi and Tata Tele, watch out for these two stocks from the Tata Group that could be in focus going forward. Even now, they are trading at the day's high. TTML is up by about 5 odd percent at 83.5 odd levels, and Tata Elxsi has also come back into momentum too. Since we talk about Tata Tele and we are discussing the telecom space, Bharti Hexacom is pulling up further. How are you looking at the charts of Bharti Hexacom?
See, the chart is looking promising, but the it is that if you're looking at the longer term chart, 1580 is what we are looking at. So once the stock crosses 1580, probably then only we will take the fresh bet. Otherwise, as of now, wait and watch. The structure is looking promising, but again, we are of the view that the stock might spend quality time in consolidation. So if you do not want to frustrate yourself, better to take position once the close is above 1580.
950, ladies and gentlemen. Let's look at some unusual movers in the market which we generally don't name on air, and what we will do is we will go to a very different index in the whole setup and try and look at some serious outperforming stocks. Okay, volume buzzers on the energy space are not many. I'd like to highlight Petronet LNG, 360 rupees, 1.37% higher. This is a stock that can be looked at for the longer term. Nifty Pharma Index, nothing much of value buzzing except for Zydus Life, 1037, and in terms of price, Wockhardt, which our friend Mitesh has already marked. I'd like to watch the BSE small cap index and look at SW Solar. This is a stock that Chakri just highlighted, and let's look at volume buzzers here. Okay, Reliance we've marked. IFB Industries is not something that we track very often, but let me just show you the price. 2155, 15% higher on volumes that are 9 times the 5-day average, but they are pretty how should I say, an illiquid counter. I'll also highlight Indigo Paints and Akzo Nobel. While a lot of attention goes to stocks like Asian and Berger, but look at Akzo Nobel. This was erstwhile ICI Paints, and for the moment you see this counter doing phenomenally well. The price was at 2900 on 1st of October, and it peaked out at 4600 just 3 days ago. On the longer term charts of Axo Nobel, what are you observing, Mitesh?
Shalji, if you remember, before a week, we had probably discussed or sent a message regarding issuing a special report on Indian paint industry and PTM. After that, PTM shoot up by 15%. Let's get back to the paint sector report. So in that, we have mentioned three companies, that is Asian Paints, Berger Paints, and AkzoNobel. So as a disclaimer, our client might have direct or indirect position into AkzoNobel.
Okay.
Stocks are looking very fantastic strategy. There is no doubt about it. And if you look at the chart pattern, longer term chart pattern, after a very long consolidation period, you see such a phenomenal up move. So here, the
Yes.
sustainability of the trend is going to happen. Probably what we are looking at is 4850 200 range on the upside. So any dip should be bought into in the stock.
Okay, got it. So that's as far as the
Sakshi.
paint space is concerned. Let's also look at some of the other interesting names that are finding their names in the broader markets, gaining traction. Both Raymond and Raymond Lifestyle, there is no let up. Raymond Lifestyle is another 10.5% higher in trade. That's something that's moving up. Then we have some other names like Hind Rectifiers that's moving up sharply. 10% up in trade today. You have Nitco that's up by about 8.3%. You have Precision Camshafts that's also moved up about 8% higher in trade. That's another one that's garnering traction. Then we also have Solara Active Pharma Sciences, again the APC space that's also garnering some traction. These are the key stocks that I could spot which are now new into the action and are seeing some strong volumes as well. Anything that catches your attention, Mitesh, within the names that I took, or would you like to comment on the Raymond twins?
Yeah, I think Solar Active, the stock which talk about, I think it's in a bar category that is catching our attention. Probably 750 is what we are looking at today. The stock has crossed that level. So now 850, 900 is the next spot for Solar Active. Very strong accumulation on the chart. And if you look at the longer term chart frame, even in the past, every dip has been used as a buying opportunity. So this is a very good stock which you have spot into. One should buy at the current level, though it is not available, but whenever it's available, one should go long the stock.
Okay, got that. So we'll keep an eye out on that. The PSU banks are about half odd percent higher now into the top spot within the sectoral moves. Metals also about half odd percent higher in trade. Financial services also up and about. Consumer durables are picking up some traction. Broader markets are thick. Private banks are returning into the green too. Now you can see flattish with a positive bias, and the back of all three of them, the Nifty bank is now up by about 0.2%. That's also recovered from the day's low as well. HDFC Bank is now up almost a percent. That's actually led the entire private sectoral move within the banking space higher in trade today. Apart from this, what's also pulled up into the green in the top zone as far as the Nifty movers are concerned from the IT pack, it's Wipro that's now up by about 1 odd percent as well. So it's kind of bucking the trend for the IT space as of now. Some momentum loss for the HPCL, it's now up only 2%. It was up 4% when we had started discussion on the OMC space and the oil related space as well. Let's again look at what else can be discussed. The Nifty Next 50 stocks, let's look at some of them to see if there is any newer name that has got added to the list. Adani stocks are actually pulling up in trade. Adani Energy Solutions up 2%, Adani Total Gas up in trade today. Then you also have Adani Enterprises, that's of course raising funds as well. That's also in focus. Long forgotten again, Mitesh, the Adani Group stocks. Anything that catches your attention here?
Absolutely. It's a forgotten story, but the story will come back for sure. And when they will come back, they will come back with a big bang. So we are looking for both Adani and Adani Port, Adani Enterprise and Adani Port. We have accumulated, we are keep on accumulating even at the current level. We think that as a house, like Tata, the kind of stocks from the Tata Group which are showing a phenomenal upside right now technically. I think sooner than later Adani Group will also join. So our preferred pick is Adani Enterprise and Adani Group. One should go long at the same time.
Okay, ladies and gentlemen, as they say, the world is round, and especially in the world of markets, what goes down, if it is quality, it comes up. Now, the only question mark on a large number of Adani counters is for how long were the charts overstretched, given the tepid momentum in many of their businesses. Whether they will turn for the better, only time will tell. But so far, let's look at what the markets have done. The main news is that 25,000 has been held repeatedly by the bulls, and it's the very strong support of put writing at 25,000, 24,900, 24,800, which is enthusing the bulls to remain in this sideways trend that we are seeing for the last 10 odd trading sessions. The Bank Nifty on its weekly expiry is up 92 points, which is a positive. It's reclaimed 52,000. Let's look at the chart of the Bank Nifty. Remember, over the past 5 trading sessions, the Bank Nifty has been up 1.4%, making it the best performing index. And it's the 21-day exponential moving average which is preventing the Nifty Bank to rise further. Let us see how long that one holds. And at the moment, Bank Nifty is at a 2-week high. Before we let you go, Mitesh, your final comments on Bank Nifty.
Yeah, so as far as Bank Nifty is concerned, Shailji, what we are looking at is 52,500. The future is at 52,215. So once 52,500 on a 15 minutes or a half an hour chart is maintained, probably we will be looking at 53,000, 54,000 straight away. So a big rally is near the corner as far as Nifty Bank is concerned. Once it takes over 52,500, the rally will resume on the upside. So wait and watch for that level. Once it is crossed on the 15 minute, go long in the stock. You can easily get 1,000-1,500 point of upside.
Thank you so much, Mitesh, for spotting these stock ideas for all our viewers, even in this dull market, and appreciate your time with us always. The Nifty is now hovering around the flat line, 25,057 at this point in time. The Nifty Bank has improved 0.1% higher for the Nifty Bank, just about 68 points higher, 51,967. Metals, infra, PSU banks, financial services, some action there. Among the top movers on the Nifty, you have HDFC Life, you have Hindalco, BPCL, SBI Life, Asian Paints and HDFC Bank. But on the downside, you do have another heavyweights like M&M that's down 2%, Trent that's down 1.5%. Nestle, IndusInd Bank, Eicher Motors, Ultratech Cement not really participating in this move. The PSE index is about 0.5% higher, led largely by the oil and gas names and the power names that are actually flourishing in trade today. REC, PFC, these kind of names are up and about. F&O space, you have Voltas that's actually pulling up 3.7% higher. Vodafone Idea, HDFC, AMC, these are the stocks that are pulling up. But on the downside, you have stocks like Zydus Life, Ipca Lab, Coforge, Glenmark Pharma, Dr. Lal Path Lab, diagnostic space taking it on the chin as far as the F&O space is concerned today. We'll continue to track the market for you viewers throughout the course of the day. There will also be interesting interactions on the IPO front and on the earnings front as well. So stay tuned. There's a lot more that you should be tracking in the markets with us on Business Today Television. With that, it's a wrap on this morning edition.
The epitome of India's railway tech prowess, the Vande Bharat sleeper, capable of speeds of up to 180 kilometers per hour. These trains are fast being introduced to the most popular routes in India. But now it's likely that these trains too will be left behind by what the Indian Railways are planning. The Railways has now awarded BEML a contract to build train sets that can run at 280 kilometers per hour. These high-speed trains will be indigenously designed and manufactured in India for the very first time. These trains will be built at BEML's Bengaluru Rail Coach Complex and are scheduled for delivery by the end of 2026. Featuring a fully air-conditioned chair car configuration, these trains will offer modern passenger amenities such as reclining and rotatable seats, special provisions for passengers with restricted mobility, and on-board infotainment systems. According to BEML, it has to deliver 2 high-speed train sets, each comprising 8 cars for a total contract value of 867 crore rupees. According to reports, the BEML-built train sets will be a fallback for the government's bullet train plans. Cost overruns and supply delays have hit the project hard. Japan reportedly toughened its conditions to supply the Shinkansen E5 train, which is now only expected in 2026. Railways Minister Ashwani Vaishnav has also visited Japan last month, reportedly to sort out pending issues ahead of Prime Minister Narendra Modi's visit later this year. Bureau Report, Business Today TV.
If you like the video, do like, comment, share and subscribe.
Just over a year after everyone thought that the worst is over in the India-Canada ties, came this shocker from Canadian Prime Minister.
As the RCMP Commissioner stated earlier, they have clear and compelling evidence that agents of the Government of India have engaged in and continue to engage in activities that pose a significant threat to public safety.
Diplomatic tensions between the two countries have again ratcheted up, with India expelling 6 Canadian diplomats, including the acting High Commissioner, and withdrawing its own High Commissioner and several other envoys from Ottawa. Then came this statement, which could potentially impact business ties between India and Canada.
The NDP are calling for more severe action. You've expelled diplomats, but they're saying sanctions are warranted given the severity of the allegations leveled today. Is the federal government considering sanctions against India? And if it's not sanctions, what other steps are you considering taking?
So today was a really important step. When you look at what is available in our toolbox, expulsing diplomats is one of the highest level, the highest and the toughest measure that a country can take under the Vienna Convention. For the rest, we'll continue to push India to make sure that they cooperate. We'll continue to engage with our Five Eyes partners. We'll continue to engage with also all our G7 partners, and everything is on the table.
Analysts, however, are of the view that the diplomatic flare-up is unlikely to cinch the trade ties. They feel that the private trade is unlikely to be affected in the long term, given the deep ties the two countries have shared with each other in trade. According to Invest India, Canada was the 17th largest investor in India between April 2000 and June 2024, with Canadian foreign direct investments at $3.9 billion during the period. Currently, there are more than 600 Canadian companies present in India. Trade between the two nations has risen gradually but steadily in the past 5 years, barring a COVID-era dip. Bilateral trade rose more than 23% between 2019 and 2024. A case in point is China. The diplomatic freeze after the Galwan clashes in May 2020 and the subsequent border standoff has still not thawed. But this has not stopped China from overtaking the United States as India's largest trade partner in 23-24. The increase in trade activity happened despite greater scrutiny by the Government of India on investments and imports from China. India is also among the more popular destinations for Canadian pension fund investments. Biggies like Canada Pension Plan Investment Board, Ontario Teachers Pension Plan, CPTQ, and the Ontario Municipal Employees Retirement System, which control hundreds of billions of dollars in pension money, have invested more than $50 billion in India. Other companies like Sun Life Financial, British Columbia Investment Management Corporation, Fairfax Financial Holdings and Brookfield Asset Management are also invested deep into India. Big Indian companies like the Aditya Birla Group, Tata Consultancy Services, Infosys and Wipro have a large presence in Canada and have created hundreds of thousands of jobs. Canada also is one of the biggest suppliers of lentil or dal to India. In 2023, it accounted for more than half of all dal imports. India also depends on Canada for potash, an essential ingredient in fertilizer production. Other big imports from Canada include the pharma products, timber and pulp, among others. Analysts believe that the Canadian government's actions against India are dictated by politics. Justin Trudeau's Liberal Party of Canada is on a sticky wicket, and the Canadian Prime Minister is seen pandering to as many interests as he possibly can before elections next year in September-October. Bureau Report, Business Today Television.
Good afternoon, ladies and gentlemen. Welcome to this special edition on Business Today Television, where we will discuss the most talked about and India's largest public offer of equity shares from Hyundai India. The IPO opens today for subscription is for 27,870 crores. This is the largest offer for sale / IPO that has ever come on the Lal Street and is priced anywhere between 1865 to 1960 rupees per share. A lot of data will be coming to you on the screen window, but let us at this point of get Miss Astha Jain, Senior Research Analyst at HIM Securities, to discuss the prospects of this IPO. Namaste Astha ji, a very warm welcome to you. What a wonderful time to be on the Lal Street. One after another, lots of IPOs are getting listed and many of them at a very sharp premium to their offer price. Now, what are the hopes and expectations that you have from Hyundai's mega IPO, and what advice do you offer to potential investors?
Thank you for calling me on the show. Now, talking about this IPO in particular, yes, it is the largest IPO which the bourses have witnessed after such a long time. So it is the largest IPO, and Hyundai Motors India Limited, as we all know, it is a leading player, and in the oligopolistic market where there are only two passenger vehicle makers are there, so it holds the second position after Maruti. So Hyundai Motors India Limited, it is the second largest player in the Indian market, and in fact, if I talk about the global market, it is the third largest player. So talking about this counter, they hold a strong market share. Their financial performance is very strong, and the valuation, which is the major concern at this point of the time, I'm highlighting directly that point. The valuation looks to be little stretched if I compare it to with the immediate comparable, which is Maruti. I'm not taking the other players like Mahindra and Mahindra or Tata Motors for the sake into the comparison, but looking after the valuation, it looks little stretched at the current point of time.
Okay. Astha ji, let's just break it out very simply. Because it is an offer for sale and none of the money that is being raised, which is 27,870 crores, will come to the Indian company. All of it will be taken by the Korean payment. So this money is not coming into the Indian unit. It is not going to be used for any expansion or any increase in its retail presence. The money is going to Korea. Now, very simply, should the investors apply at the lower price range, which is 1865, or do you feel that post listing the secondary markets will give a better opportunity to buy this IPO? Do you expect this IPO to be oversubscribed once, twice, or 10 times?
So now talking about the subscription figure, first of all, I'm taking your last query first. We are expecting it to subscribe fully. I am not able to comment right now on the oversubscription figures because we really need to see at this point of the time. My idea here that around 10% in the retail category, it is already subscribed by 10%. So we are expecting this IPO to be a go-through IPO with a full subscription. Maybe oversubscription might be there. So now what should a retail investor do? First of all, we are recommending it to subscribe only for long-term purpose. So those who are having a long-term view in the mind, long-term here I'm referring to 6 to 8 months minimum time period. So if this such a time period is there into the mind, then put your money into this IPO, otherwise leave it. Why? Because what we are saying that it is first of all the biggest size IPO, and we have seen in the past, the history says itself, whenever such large size IPO came, they have never garnered listing day premium. And the major point about this company is that the valuations are also stretched. So talking about the listing pop seems to be a negligible if I talk about this IPO. But there is one caveat here, Shail sir, and the caveat is that in case if the IPO will go through and it will be subscribed like only 1 or 2 times, then the hands which will be subscribing it will be a very strong hand, and in such case the supply will not be there on the listing day, because we all know those who will be subscribing to this IPO, they are keeping into the mind the long-term point of view. So with such a mindset, if people are subscribing to the IPO, then they will not going to come on the listing day selling. So in that case, maybe the supply will not be there, and then we might see some sort of a flat listing or maybe 4 to 5% listing. But here the main question is it a worth risk taking at to 4 to 5% listing gain, if at all, if it comes? Then my idea is it's better to stay away from this IPO. Don't apply at this point of a time. Let the price settle after the listing, and then one can make an entry, because at the max we are expecting 5% listing gain at the max, in case if it will going to happen. I'm not saying that it will be happening, but in case if it will going to happen, so at the max 5 to 10%. So I think there will be no worry in those cases, even if it will be available at 10%. But rather than making or taking risk at this point of a time, it is better to wait and watch. Let the listing be done. Let's see how the listing will be there, and then make entry into this counter. Maybe we will get the better chance to entry at the lower price. So looking after all these parameters, we are recommending only for long-term investors to make an entry into this counter. Otherwise, for short term, leave this counter, let the price settle, and then make entry into this counter at the later stages.
Okay. Ladies and gentlemen, if you look at the workings of Hyundai, it's one of those very well managed automakers in India, and over a long period of time, this company has created immense wealth, at least for its parent. And of course, it has added a lot of competitive fervor in the market. They have 13 models so far. And look at the Korean parent's volumes. Hyundai contributes about 18.2% of its parent's volume. So far, Hyundai makes about 8.2 lakh units per year in India. The capacity is going to rise to about 10.7 lakh units by FY26. They have just bought the Ford Motors plant in Maharashtra. As of now, Hyundai has just one integrated plant which is operating out of Chennai. There are other more positives. If you look at the PE at which it will get listed, it is somewhere like 25.6 against the peer median of about 27.5 times. So IPO is fairly okay. The issue is that the entire money, 27,870 crores, is being taken by the parent, and not one single paisa is going to be utilized to further improve the market share, to further improve the working capital requirements and many other things in the Indian market. That is the only quibble that people have. One point of contest is also that since FY20, Hyundai India has lost market share. It was at 17.6% in India, and it is now somewhere like 13-14%, and that is because you have a very strong competition coming in from Tata Motors, from Mahindra and Mahindra, and in the case of Indians, we are now buying more SUVs than passenger cars. When you Astha compare Hyundai to Maruti, the reason why I ask about Maruti is because somewhere in 2003, the Maruti IPO was priced at 125 rupees, got listed at 140, and is now somewhere like 13,000 rupees. Yours truly is a Maruti IPO holder, and therefore, I have a special interest in Hyundai's IPO. Astha.
Yes, but at that time Maruti was the only player. First of all, here we are working, or we are talking about the oligopolistic market. So in oligopolistic market, there are two players, right? And one major point about the concern is that right now their margins are superior than Maruti's, especially if I talk about their EBIT margins or ROE or ROCs.
Yes.
But here the point is that now they are doing the capacity expansion. So Shail sir, my idea here is that when you will be doing the capacity expansion, definitely your ratios will going to dilute. So whether the sustainability of these margins, whether these margins will be sustainable or not, that we really need to know. Because right now the only edge which the Hyundai is enjoying over the Maruti, apart from the fact that the share of the SUV in case of Hyundai is better, because Hyundai is having 63% share of SUV in their total product portfolio, and SUV share is always a margin garnering, portfolio. So in that way also their margins are better. But with this capacity expansion, will they able to maintain the margins? We really need to see that, because the company is planning 30% capacity expansion in coming 1 or 2 years. So at that time, my idea here is that these margins will also be diluting going forward. So looking after the Maruti, there are some points which are better than the Maruti, but in the longer term, will these points of maintaining strong margins, I think we really need to say, are questionable at this point of a time. And that's why we are not very much positive on this part. Another point is that the industry tailwind. So I think the industry tailwind is also not supporting at current point of a time, because we are seeing the auto numbers which are showing a pure decline, especially in the passenger vehicle sales. So at this time also, we really need to see how the industry is going to support such kind of valuations, given the fact the sales is declining. So altogether, Maruti always enjoys #1 position, where they have a strong domestic market share, and their valuation are in line with the Hyundai's valuation, somewhere on the price to book multiple. In fact, Maruti is at a discount to Hyundai. So that's why I'm not very much positive on the Hyundai's IPO. From the shorter term point of view, again, I am here emphasizing the shorter term factor, not the longer term. For longer term, it is a go candidate, but for shorter term, it is better to wait and watch.
Okay, Maruti, ladies and gentlemen, enjoys a 43% market share in the passenger vehicle market, compared with 15% that Hyundai has. But some of the numbers that are there on the balance sheet of Hyundai are better than Maruti, and let me just highlight them. To be fair, we are offering you an honest, unbiased assessment on what to do with Hyundai as far as the IPO is concerned. It is not a recommendation to either buy or not buy. So this is data, and it is for you and your own independent financial advisor for you to come to a decision. Okay, now let's look at this thing. 3-year median operating margin for Hyundai is 7%, compared with 3.5% for Maruti. Operating profit growth at Hyundai is 53.6%, compared with Maruti's 83.5%. 3-year median return on capital employed for Hyundai is 20.4. It is far better than the 10.6% that you see on Maruti Suzuki, and the volume growth is where Maruti edges higher, 11.4% per annum versus 9.7% as far as Hyundai is concerned. So all these parameters, ladies and gentlemen, will help you make a decision. Asta is very clear. If you're looking for a very long-term approach, say at least 1 year or 2 year, only then apply this IPO. If you are really very keen to have this brand name in your portfolio, then please apply at the lower price point. And let me confirm that lower price point for you. That I think is at 1865 rupees per share. Remember, all of the money that you are coming to pay to this offer for sale is going to go back to Korea. The only reason that Hyundai parent is getting this company listed is because of very frothy valuations that are there in the Indian market at this point of time. They are taking advantage of this wonderful bull run in the secondary markets and a fabulous bull run in the primary markets to sell you their company at a substantial premium, not only to their own business in Korea, but also at a fairly decent higher valuation compared with local peers in a market which is extremely competitive. Asta, I will let you have the last word. Your final thoughts. Are you applying for this IPO? Okay, this will be the critical factor. Are you putting in your own money?
So, due to certain compliances, now we are not allowed to invest in the IPOs also, because we recommend IPOs a lot. So, we don't invest in that or don't apply in that. But my fair advice to everyone is that just for the sake of 4 to 5% listing gain, in case if it will happen, I think it is not worth a risk taking. So, better to wait and watch, let the price settle, because I'm not saying that it will not list at the premium, maybe, who knows, because at that time, if the subscription will be very lower, then definitely all those hands will be very solid hands and they will not come on the listing day selling. So might be the issue price can be maintained, or maybe 4 or 5% premium can be maintained. I'm giving up one possibility, but I think it is not worth risk taking for just that 4 to 5% premium also. So my idea here is very much clear. Apply for long term if you want to apply, otherwise stay away, at least for the listing gain perspective from this IPO.
The other, perhaps just the market folklore for larger IPOs is that on listing day they haven't done well. Look at how LIC performed, look at how Paytm did. Look at how one or two other very, very big offers sort of flustered, because a large part of that money was taken away by the parent or the PE fund or the VC fund away from the company, and a very small percentage or minuscule 0% in the case of Hyundai came back to serve the Indian parent. Thank you so much, Asta, and it is such a pleasure to again be in touch with you. Let's hope Hyundai over the longer term creates wonderful value for Indian shareholders, just as Maruti has over the last 21 years. It's just a 100 bagger. I love to say that, because long-term investors into quality IPOs and great stocks generally get rewarded more than what their expectations were. Asta, in 2022 or 2003, when the IPO was listed at Maruti, believe me, nobody thought it would be a 100 bagger in 20 years. But here we are, and such is life.
Right. Absolutely right, sir. That's why we are saying long term is the only phenomena for those who are interested in applying. Because one more case of the Reliance Power is, I still remember that time in 2008 when Reliance Power IPO came, because I was at that time also, yes. I used to make IPO reports a lot. And the way it got listed, I mean, we all know the history. So sometimes big IPO, despite the strong fundamentals also, but due to the supply, side issue, we really need to see these other 2-3 points also, apart from the fundamental, that such a big IPO, the supply will be there, how it will be going to absorb, who all will be there to absorb such kind of, quantities of share when they come for the selling. So we have to take into account all these factors and then make a recommendation. And that's why I'm saying better to wait for the long term. And
yes.
If you want to have it in the portfolio, otherwise leave it. For listing in purpose, it's better to leave.
Absolutely. And at no point of time, ladies and gentlemen, is what Business Today or Asta suggesting that the IPO will, the OFS will list at a lower price, just as previous such large issues have. But all we are trying to make out is that a general correlation exists in these kind of markets when such huge IPOs come, when the market is also at a record top. So with that background in mind, ladies and gentlemen, if you do wish to apply into the offer for sale of Hyundai, please do also consult an independent financial advisor and take your own understanding of this OFS. Thank you so much, Asta. It was a pleasure hosting you.
Thank you, sir. Thank you very much.
There's a lot happening on the other side of this break, ladies and gentlemen, on Business Today Television. Continue watching.
Hello and welcome to Market Today. I am Siddharth Zarabi and joining me now is Tarun Garg, the Chief Operating Officer and whole-time Director of Hyundai Motor India, a company that has begun what could well be India's largest public issue so far. Tarun, welcome to the show. I want to begin by asking you to respond to that one big question in terms of growth, where a lot of people are saying that all the money is going to the promoter who has invested for many decades in developing the Indian business. So what happens to the company and its plans for growth across verticals? Begin by taking our viewers through your response on that particular point, Tarun.
Siddharth, thank you for having me here. Absolutely, we are on track for growth. If you talk about investments, we have already pledged 32,000 crores towards our expansion in the Pune plant, Maharashtra, of course, including Tamil Nadu, 26,000 crore in Tamil Nadu, whether it is the EV charging infrastructure, refurbishment of the plant, of course, the new models launches over the next 8 to 10 years. So far we have invested 30,000 crore in India and further 32,000 crores over the next 8 to 10 years. If you see our track record, we are generating enough cash to take care of our capex requirements. So absolutely everything is on track. If you see regarding growth, most important thing is what are the new things which we are doing. If you see in the EV space, we are coming out with a very aggressive plan with 4 EVs coming up, starting with the Creta EV, which is going to come absolutely in the next quarter itself, Creta being a very strong brand. And not only that, we are covering it up by localizing as we speak, Siddharth. The battery packs are being localized. We have already announced a collaboration with a local Indian partner for the LFP cell manufacturing. We are looking at drivetrain, power electronics as well. So the entire EV ecosystem is being localized. We are looking at charging infrastructure development. So you can see that a lot of new initiatives are being taken, both in terms of capex, in terms of adding new segments. Yes, we are on a path to growth trajectory. And I believe this IPO will give an opportunity to both the local investors as well as international global investors to be a part of this growth story.
Tarun, I've many years ago as a reporter covered the company when BVR Subbu used to be there. And I recall the Santro, which was really at that point of time the most popular car model that India had seen. From then to now, why time the IPO now? Is it because markets are doing well and the promoter wanted to cash out? I'm just trying to understand the need for such a large float at a time in our market history as is currently panning out.
So if you see, India, of course, is now the 5th biggest economy in the world, exciting auto market. Hyundai has been now in India for 26 plus years. We have developed as the 2nd biggest auto OEM in the passenger vehicle space. We have grown a long way since the Santro was introduced. If you see today, SUVs are contributing 68% to our sales. We have many marquee brands, including the Creta, the Venue, the Exter, the i10, the i20. So our domestic and export, big focus area. Now the new plant in Pune is coming up, which will add up 250,000 to our current capacity of 824,000, which will basically take it to close to 1.1 million vehicles. So you can see, I think I can say that this is probably the 2nd phase of Hyundai's growth story in India. And I believe this is absolutely the right time to really further Indianize operations. And of course, our aim is to become the most trusted brand in India and also pursue global standards, whether it is in terms of operations, excellence, and of course, in terms of governance as well.
Well, since I went so back into the past, I need to look at the future with you, Tarun, and this is the EV segment, and you touched upon that. The global story of EVs and the current Indian market, where the market leader has, we well know, a portfolio of electric offerings. How do you plan to make a serious dent in this space? Because entry-level cars, sedans, and even SUVs that you are into are a different ball game from the EV space. And for the value-conscious Indian consumer, some parts or some segments of EV buyers still remain sensitive to the upfront cost, for example, or the charging issues or the range anxiety. Give us your vision as far as the EV space is concerned, Tarun.
So if you see, Siddharth, India is at the early stage of electrification. Currently, the penetration is about 2.5%, but backed by a very strong government focus and incentives, we believe that this segment is going to accelerate fast. And if you see Hyundai, we are looking at it very, very comprehensively. Of course, the launch of Kona and Ioniq 5 has given us a very good foray into the customer. Who is the customer? What are his preferences? There's a strong image in the mind of the customer as well. Now we are looking at not only introducing some great products. Creta, as you know, is a very strong brand. We believe starting with the Creta, we are entering the high volume segment in the EV space. We are backing it up with a very strong localization. So as we speak now, Siddharth, the battery packs are being localized in Tamil Nadu. We are looking at LFP cell manufacturing with a local Indian partner, and also the drivetrain and power electronics. So the entire EV supply chain ecosystem is being localized so that it will help us to really position our EVs well. You talked about charging infrastructure. Even that is a big focus area. It's a three-pronged approach. If we see Hyundai, we are focusing big way on the fast chargers. So one, of course, we have a tie-up with the Charge Zone where 100 fast chargers are being, made at our dealerships. Then with the Tamil Nadu government, there's a MOU for 100 fast charging states in the state of Tamil Nadu. Then our study suggested that while 85% of the customers charge at home or office, however, they were reluctant to take their EVs on highways. So that has become a big focus area on some prominent locations and on some national highways. We now have 15 DC charging stations. We are going to pursue that as well. Then we have a very strong charging management system which gives access to our customers to around 8,000 charging stations in India. So that is the next strategy. You have seen the PM eDrive scheme, which talks about huge focus on the charging infrastructure. Then you see so many private operators, whether it is Charge Zone, whether it is Static, whether it is Adani, Tata Power, they have all announced very aggressive plans. So we believe that it's going to be a comprehensive approach to electrification in India, which will really lead to a fast acceleration, and Hyundai should play a very leading role in terms of this electrification. So probably this is going to be a very big step for us to really help us to not only make a big mark in the EV segment, but also look at improving our overall market share.
In 5 years' time from now, what do you expect from a value and volume perspective in terms of Hyundai's EV offerings, and what kind of market share are you looking to target?
So if you see, there are two things here. One is, if you see the global markets, of course, whether it's US, whether it's Europe, whether it's China, of course, the EV penetration depends market to market. Somewhere it is 10 to 15%, say in US, maybe around 20% in Europe, maybe more than 35% in China. If you talk about India, like I said, we are currently at 2.5%. So there is a lot of upside to it, and we believe that market will, of course, grow. Whether it will reach 15% or 20% is anybody's guess. But most importantly, Hyundai should be able to target a market share in EVs higher than what we have in the IC space, because obviously all the manufacturers are really not focusing on the EV space. So that will open up more opportunities, and we believe that one, what I talked about, the ecosystem of supply chain as well as the charging, plus 4 models, which are going to play a very important role in increasing the volumes and also bring in economies of scale. So I think that should really help us to grow the EV space as far as Hyundai Motor India is concerned.
Tarun, you've seen the kind of retail participation in the Indian stock market. 5 years ago, if we were having this conversation, the story was very different. You've also seen the increasing amount of money that is coming in from SIPs, from pension funds that is going into the Indian market. The Indian market is now, the question that we debate there is, how much of a Atmanirbhar stock market is it? To those retail investors who may be reading through the fine print and asking themselves this question, all the money is going to the promoter, what kind of outlook would you offer to them at this stage of medium-term returns, dividend prospects from the Hyundai stock?
So look, what is most important is that you see the history, because this is a fact. So if you see our performance, whether it is the continuous growth which we have had over all these years, the consistent market share and the number 2 position which we have had, the history of really raising benchmark products in India, creating new benchmarks in every segment in which we have come. Plus, if you see the financial year 24 results, on a turnover of close to 70,000 crores, we had an EBITDA margin of 13.1%. We continued that great performance even in Q1 of financial 25. So that is what is the proposition. Which we offer in terms of the growth, in terms of the expansion. Like I already said, after 15 years, a new plant in terms of a Pune plant is coming up, which will add 250,000 to our capacity, help us to really increase both our domestic and export volumes. The premiumization strategy continues. The SUVization continues. Last year, we had a SUV contribution of 60%. We have already reached 68% this year. In fact, in September, we reached 70%. We are continuously innovating. A couple of months back, we launched the dual cylinder CNG in Exter and Nios. We are receiving some great response. Last month, we launched the Alcazar facelift. We are receiving some great response. Creta continues to be a segment leader. So I think it is all about really balancing growth, volume and market share, and the new capacity coming in is what the proposition is, I believe. We are generating enough cash to really take care of our capex requirements, in the short to medium term. So absolutely, I would say that this appears to be the second phase of Hyundai's growth story in India, and this is where we stand in terms of our proposition.
Tarun, by when can we expect the promoter to take a call on going down to 75% holding in line with the 25% float size? And is that decision going to be linked with any possible future fundraising requirements that may arise?
So as per the regulation, we are supposed to do it within 3 to 5 years. And this is what I can tell you at this stage, that yes, we will go for that balance minimum 7.5% between 3 to 5 years.
In the near term, immediate term, do you see any signs of stress? Because, over the last several months across, and I'm not talking about any particular category that your company serves in, we've seen a buildup of inventories in certain segments of the overall auto sector that was linked to, for example, rural distress or a slowing economy, high interest rates. In the immediate term, is that phase still continuing, or is the worst behind us from a broad industry perspective, Tarun?
So look, while I cannot predict the future, but I have spent more than 30 years in the auto industry, and I have seen enough of crest and pros. If you see CAGR, Siddharth, CAGR is at 5%, whether it's 5-year CAGR or 10% CAGR. However, we saw more than 20% growth in 22, then we saw close to 9% growth in 23. So some amount of moderation is very natural. That is point number one. Point number two is June, July, August, September, because of heat, rain, flood, etc., are always some sluggish months. October has started with a bang. This is after a long time that we have seen both the festivals of Navratri as well as Dhanteras in the same month. We are looking at the Vahan data until yesterday. Same month over last month, 27% growth we are witnessing in the Vahan registrations, October till date versus September till date. So I believe we are, already seeing positive offshoots. So I don't think there is anything to worry. And like I said, we are fairly confident, and in fact very confident about the mid and long term growth prospects of the Indian auto industry.
Tarun, given the intense competition in our auto industry, and it's a remarkable one in this part of the world because of the levels of indigenization, because of the local capacity that foreign as well as domestic automakers have put up, and we have to thank policy decisions of 3-4 decades ago for that happening. But is there any segment, and I go back to an earlier answer to just expand on what you had said, is there any segment in terms of the overall product demands of the Indian market where you feel that your company will sort of refocus and double its efforts in the near future?
So if you see India, still the car penetration is around 30 per thousand, and obviously it's such a big country, so there will always be opportunities. Hyundai has always been ahead of the curve in identifying these opportunities. Last year we introduced Exter in the micro SUV segment. It has done so well. I talked about electrification. We believe there is still so much of upside to what we can do in that space, and of course there are more opportunities. I cannot talk about specific segments, but what I can say is our record in India suggests that we have always looked at those opportunities, and we have been able to really do it at the right time, right price, and also raising the benchmarks. And there is no reason to believe that we will, of course, why we will not do it in the future. We will definitely continue to follow similar strategy in the future as well.
Tarun, at one hand, we have seen the increasing SUization of the market, and that is a word that I've tried to bring in to explain what is happening in terms of this preference of customers changing and auto companies responding. But at the top end of the actual real SUV market, the number of offerings seems to be limited. Your competitors have category defining products in that segment. On the off chance, can I get you to answer that question, that will Hyundai ever look at it, perhaps either do a made for India model to suit this requirement, or get it from somewhere else?
Look, while I cannot answer specifically on the model plan, but what I can always say is history speaks for itself, that we have seen, identified whatever the opportunities are there, and we have always believed in made for India. In fact, one thing which differentiates Hyundai from probably some of the other global players is that we have never believed in only bringing a product as it is global product and trying to sell it in India. We have believed in India-centric products right from the time we launched the Santro or the i10 or the Accent or the Creta or the Venue or the Exter. I think this has been one key reason for our success, and we shall continue to do in the future as well. But it will be very difficult for me to tell you specifically that this is the segment we are looking for.
But not to ask you about your company plans, but a general quick comment about that, the large SUV segment. Is that growing in India, or has that kind of plateaued?
Look, with a country like India, where the disposable income continues to go up, and of course customer aspirations really going up, we are seeing really the customer choice going up. In fact, just to share with you, even the ASP for us has continuously gone up, now reached 7,70,000 rupees. So first time buyer percentage has gone up from 32% 5 years back to 38% despite the ASP going up. So very clearly, Siddharth, customer is moving up the chain, which throws up more and more opportunities in the future. You talked about a particular segment that, yes, it is definitely growing. Today it is contributing close to, I'm talking about the Alcazar segment. It is already contributing about 7.5 to 8% to the overall industry. So obviously there are opportunities everywhere. Like I mentioned, there were opportunities in the micro SUV space which we captured, and we are looking at all these segments where there's an opportunity, and where probably we can look at, okay, what is it we can do about it. But specifically, like I said, I will not like to comment on any particular segment.
Over the past 4 years, Tarun, the PV market share seems to have fallen by almost 300 basis points, from 17.5 to around 14.5%. Is that something to stay? Is management comfortable with that level, or are you working towards clawing back and perhaps going above it?
Look, as a sales professional, I will never be satisfied with the current performance, whether it is volume or market share. So no way. And we always want to, improve volume, improve market share, improve profit. And the important thing is, how do you really balance? If you talk about our market share, our volumes, if you see over the last 5 years, say 2018 to 2023, market share has probably gone down by 1% or so. At the same time, the ASP has gone up, the profit has gone up, the EBITDA margins have gone up, the volumes have gone up. In fact, over the past 26 years, we are one company which has consistently grown, improved margins, and also being number two, a very strong number two player. So I believe this kind of a holistic holistic approach, a balanced approach helps you to have a sustainable growth. And that is what we will pursue. The new capacities which are coming in will give us more headroom to really look at market share. And of course, we will do anything and everything possible to pursue the same strategy of market share, volume, and profit.
One final question before I let you go. To those prospective investors who may be listening in to this conversation and they have overall 3 days to make up their mind, what would you tell them? Why should they bid, if at all?
So look, like I said, that we have been in India for 26 plus years. We have really identified market trends. Marquee brands have been launched. We have got so much of love and affection, and we have a very strong parentage. I think in these times of uncertainty, which is becoming a global norm, in terms of technology, we are really agnostic. We are offering different kind of technologies, whether it is petrol, CNG, EVs, diesel. We have access to all HMC technologies like hybrid, strong hybrid, plug-in hybrid, even hydrogen. So we believe that we are really rightly placed to take care of all the opportunities which come in. The capacity is coming in, exporting to 80 plus countries. So I think all this provides a good platform to us to continue our growth phase in India. So this is what is our proposition, and this is what we have mentioned in our RHP as well.
A colleague has asked me to definitely ask you that since it's such a gargantuan IPO and it's open for everyone, are you open as a company, given overall market dynamics, to offer some discounts also, if not to everyone, but at least investors who manage to pick up some shares in your issue?
So I'll pass that question.
Okay, well, we'll wait for how investors respond to that and many more questions. But Tarun, wish you all the very well for all your plans. Viewers, that was Tarun Garg talking to us about a behemoth of an IPO from a car maker who hopes that India's passion for wheels is going to mean and lead to a certain set of returns for its promoter, who from a 100% owned company is now going down to 82.5% and eventually will also have to meet the 25% minimum public norm. But we'll come to that later on. For now, it's a wrap on this conversation with Tarun Garg. We'll slip into a short break. We'll come back with more. Do stay tuned in with Business Today Television.
Hyundai IPO, the biggest ever IPO, is going to be opening for subscription in trade today. This is something that we have been all waiting for. We do know it's going to be upwards of 27,870 odd crore rupees at the upper end of the price band. In the kind of large scale of an IPO that's opening up. 1960 is the upper end of the price band. 7 shares is what one gets in the minimum lot, in the first one lot of subscription. And I want to understand from you, how does it really change the landscape for the Indian automotive industry's listed space? And are you really going to be subscribing yourself and advising subscribe to this IPO to all the clients and investors too?
Yeah, definitely. Good morning. So we have, given a subscription rating or subscribe rating to this IPO, and primarily it's more of a tactical play rather than a pure fundamental play. Because if you look at the IPO pricing, hardly any juice or room has been left there. It's priced to perfection. At the same time, if you look at the structure of this, one is the 27,000 odd crores is a completely in OFS. So this entire money would be taken out by the promoters. And before that, in FY24 itself, they have taken around 10,000 odd crores of dividend income. So put together 37,000 odd crores has gone to the promoter for the investments over a year, 28 years. 1996 is the year when they commenced operations in India. from that time. So a very good return on investment. If you look at from ROI perspective for the promoters, it's an excellent investment they have done. What will happen from now on after this listing is most of the fund managers, PMS and HNI circle will have to rebalance their portfolio and give some allocation to the Hyundai as well in line with Maruti. So that basket which was earmarked for say passenger vehicles, which only Maruti used to enjoy the 100% allocation, will be now, I mean, the split will be discretionary, whoever decides the split, but that would be split between Hyundai and Maruti. The only silver lining to Hyundai is they have launched an EV